Everybody, morning. Good morning, YouTube. Anyway, hey, good morning, everybody. And Goose, Don, Dan, Sergio, Will, David, Rob, Gary, Svenborn, Jason, JB, Rongamer, Diane, Frank, Ted. Good to see everybody. Before I get too far along, I'm doing a third party event, kind of like 30 Minutes of Awesome, but it's hosted somewhere else. It's a multi speaker event. If you have a disposable email address, it might be good to use that for those of you that asked me to warn you previously. And I'll throw that link in the chat. If you want to register for it, I'm going to be taking requests. I'll be making predictions for 2025. That's coming up at 2 p.m. Eastern Time. 2 p.m. Eastern. I guess that's 11 Pacific. So that'll be out there later on today. If you want to come hang out with me, cool. I will be live and going through stuff. Predictions, things you may or may not have heard me say before, doing requests, and that's yeah, disposable. Yeah. Yeah, one of those email addresses, you know. Anyway. Anyway. Welcome to the show, everybody. Welcome to the show. Good morning. Hey, Peggy. I don't recognize your name, but welcome to the show. John, Maurizio, Merle, Rick, Jan. For those of you that aren't channel members, welcome to the show. If you are sitting here watching and you're like, well, how do I chat like everybody else? Just click the button in the corner, be a subscriber on the channel. You can chat. If you hang out a few times and you're like, man, I wonder what kind of content he's got for members. I make some members only content. You can become a member of the channel. I do appreciate it. Helps support me doing this. This YouTube thing is on my own, and I spend a lot of time doing it and helping people like you. And if you want to go with the publisher, you know, links in the description. You can buy like the roadmap line, and the roadmap watch list thing for $5. It's down there, and we have a triple threat offer coming up at 11:15 that the publisher's doing. So, hey, all sorts of options if you just want to hang out. And if you become a channel member, you can get in Discord. Instructions are inside the members area. Like if you're a channel member, it's inside the channel members area. The YouTube and the publisher are separate things, so can't cross-pollinate. Sorry, can't just YouTube doesn't even let me comp anybody. So I've tried, and they're like, no, we just don't allow that. I talked all the way up to like almost to the vice president of YouTube or something like that. They're just like, well, we'll consider doing that in the future, but we don't do that right now. So anyway, thanks for coming, everybody. Thanks for joining us. And let's talk about AI sectors here in the new year. How are these things coming along? Like, where's the adoption? All that stuff. We hear about all this AI adoption, how it's going to change the world, going to take jobs, blah, 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 blah. Look right here. Get back to where I can see the chat. There we go. I guess I should make that just a tad smaller. So let's see, back to about that size maybe. This is percentage of a particular sector that's using AI in some form or another. Right there. There you go. October 2023. That's the dark blue. Right there. It's a third-party link. I don't know, it's a third-party guest spot with multi-speakers. There's quite a few people giving predictions for 2025. So that link's right out there. You can go. I mean, it's like, if you want to, cool. If you don't want to, cool. Blue is as of last month, the light blue. Dark blue, October. A little hard to see on this black background, but you got what you got when you borrow content from other people. And sorry about my gruffness. Still trying to get over this allergy thing. Getting better. Like, my throat doesn't burn. My tonsils are finally not swollen, sticking out of the side of my face, right at the bottom of my jaw. So anyway, the open blue is what's planned for the first half of 2025. I was kind of shocked how amazingly small the adoption across, like, this is 25% right here. And we're looking at like 17% of information sector, the information sector. Only about 17% as of December had adopted some form of AI at all. It might be up to about 24% by June this year, end of June, beginning of July. We've got professional, scientific, technical. You know, there was a large adoption of that coming in 2024, but not making huge headway. Maybe up to 21%. Educational services. I know there's been some heartburn there. I've seen all sorts of stuff back and forth about whether students should be allowed to use AI at all. I mean, it's one of those things, like, it's like the internet, you know, teachers were like leery of the internet. Oh, they can just look up stuff and plagiarize and download papers and turn them in. And that's not quite how that worked. And AI, well, it's not going to just, you know, while it does write better than a lot of people, it doesn't, right now, it doesn't have a lot of original ideas. Of course, I guess when you're doing 8th grade papers, you know, there's probably not a lot of original ideas there either. So, I mean, I think it's a tool that can help when used properly. I don't think we know how to use it properly yet, and that's kind of evidenced by the low adoption rate here. I mean, you come all the way down to the bottom. You got accommodation and food services, barely, you know, like 1%, and barely any add-on in 2024, and barely any planned add-on into 2025. I mean, this is sectors, so it's not really like, you know, I guess you got to kind of, this is not providers, this is use, this is actual usage by industry. It's like what the AI companies are selling to. Like, this is the mass adoption that everybody's talking about. You know, all this industry mass adoption, we're going to lose jobs. Doesn't look like we're really getting mass adoption here. Transportation and warehousing, kind of maxed out right there. Not really planning much more. Manufacturing, didn't really have any 2024 adoption. Got a little bit planned 2025. Wholesale trade. I mean, there's all sorts of things, like I said, there's all sorts of ideas on how to use AI. I've only seen one practical, actual, super beneficial use so far. It's not just creating ads and crap faster. All right. I mean, like, the publisher I work with, they're trying to figure out how to use AI to make more ads and more crap faster. I'm just like, why don't we just focus on quality content? That's what I do. I don't use it. I mean, I use AI for my thumbnail because I'm not that great at art. But beyond that, I don't really use it for much. I've tried to use it for some content ideas and stuff like that. And it just doesn't come off the original content. Doesn't think like I do. You know, and you might ask, what's the one thing that you know of that AI is doing really good? It's driving freaking Tesla cars. Like, it's pretty wild. You should try 13.2.2 if you possibly can. If you have any friends that have 13.2.2, get full self-driving. You should get them a demo that, and it's only going to get drastically better from there. So, I mean, it already drives probably better than, I would say, 85% of people on the road. Now, it does make some stupid mistakes. It has some weird things. Like, last night it followed somebody, like somebody was probably texting and driving and drifted across 2 lanes, and it started following them. I was like, what the fudge are you doing? And, but, you know, I think it thought the person was avoiding something, but they were obviously being stupid. And, it didn't have the ability to fix that, but, you know, it didn't put me at risk. It just was doing something stupid. And I was just like, come on, it's past that idiot. It's followed texting. It's been a pet peeve of mine. It's followed people texting and driving like 3 times since I've had it in the last week or so. I'm like, quit following people that are texting and driving. You can just tell they are because they're driving stupid. Anyway, My only gripe about 13.2.2 so far, or only major gripe, and so there's the adoption, this massive adoption that we've all been hearing about. This is why I caution that maybe AI has played its hand. We're not going to see this massive growth in 2025 that people are hopeful for. Unless there's some sort of game changer, suddenly something changes big. I just, yeah, there you go. Wrongemer. Wrongemer's got the information on 13.2.2 right there. Just schedule a local demo drive and get some experience on that. So, and I mean, you can let me know what you think in the chat here, but I just don't see the game changer AI. It's kind of like the internet. Back in the 90s, right when it was getting popular, I was like, this is pretty cool, but the game changer apps didn't come around until after the dot-com bust. So we may see an AI bust before the game-changing real applications come about. I'm not saying that it's going to wreck Tesla or anything like that. Like, Amazon existed before the dot-com bust and got bigger after the dot-com bust. And Microsoft existed before the dot-com bust and got bigger post dot-com bust. Apple, same thing. There's companies that are existing now working on this stuff that are going to explode higher probably. But there's a lot of shakeout that's probably going to occur. It's like the same cycle over and over. You see it over and over. So be leery on getting too invested too early. I've been lucky to pick up some technologies along the way. I tend to be optimistic and early adopter on things, and then they go like later. One of the best trades I ever did was buying a particular stock on the back of the dot-com bust, and then 18 years later, I think it was, IBM bottom out. Like, I bought it for like $3 a share on the back of the dot-com bust. IBM buys it for me for $190 a share, buys out the company. And in 2018, 2019, that was Red Hat Linux. And I was like, I'm just going to buy it and hold it. I held it and made a good chunk of money. I mean, $300 invested turned it into $19,000. I mean, that was a pretty good play, but it took a while, took a long while. I've done other little things like that in the past. So if you're going to jump into AI, you got to look for the opportunity. And I just don't feel like the sky high valuations are, don't get FOMO into this. And same with quantum computing. Like, the big game changing application for quantum computing doesn't exist. The algorithms don't even actually exist. They talk a big game, but they don't actually exist. So, be careful out there trying to catch the next greatest thing. It's all a bunch of hype. There's a lot of hype, and you got to be able to cut through it. And I'm out here looking for the opportunities every day. So make sure you hit that subscribe button. Stay with me. Come visit me. So all trading involves a substantial risk of loss, as we all know. In past performance, just because I predict it or say it doesn't mean it's going to come true. So it's not necessarily indicative of future results. And this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire and consult a financial advisor, which is not what I'm doing. I'm not telling you what to get into. I'm just telling you to be careful with your money, all right? Nobody cares about your money more than you do. So many people are like, I think I'm just going to hire I'm just going to let the financial advisor guy, manage my money, manage my retirement. Be careful doing that. I mean, you probably wouldn't be here watching me if you weren't interested in your own financial well-being. But for those people that say that kind of stuff, like if you have family members, try to get them interested in managing their own financial well-being. Try, for the love of all it's, I mean, nobody's going to take care of it. There's no financial advisor ever that cares about your money more than you do. If you think they do, what they really care about is making some of your money into some of their money. And yeah. Hey, Donnie, my man. I see you in there. Good to see you, my man. Kimberly says that's my old man best friend right there. And ISM coming out at 10 o'clock, about 29 minutes from now. We'll see what happens. I don't expect much fireworks. We're getting a little bit of pullback in the pre-market. This is probably the shortest. Why am I rambling this morning? This is probably the shortest list I've ever had on Morning Monster right here in the second trading day of 2025. How short is it? Well, it's pretty dismally short. Like 11 tickers. So we'll go through it. Come on now. Lagging. TradingView lagging. Yeah, look at this. All 11 tickers. And there was nothing on the bonus trade setups. So just not a lot happening here. Now, if you're new here, you're looking at this chart, you're like, wow, there's a lot going on. That's because we update this every day. Just kind of keep on keeping on. Now, it's likely if we explode out, make new highs, we're coming up on up here, this resistance. But right now, we're kind of stuck in this pattern. We rallied up, we stalled out at a key resistance level and started dipping back. Now we have a new key resistance level that we came up to. Here we are, 2 minutes in. We're sitting right there at it today. We've kind of poked into it yesterday, and then it made a new low. This makes it a little precarious here. A little bit precarious. What are we gonna do? So jump down, look at the lower time frames here. Let's just clean it up just a little bit so we can see a little bit better. This high is important right there from that occurred the day after Christmas, so last week. This low from yesterday. Those are the two key levels right now. This 15-minute roadmap line right there, like I said, if you want the roadmap line, you can either go to my channel homepage and watch the video and get the code, or if you just want an easy button to throw it on the charts, links in the description. This right here, that's the resistance in this time frame, 15-minute. Why 15-minute? Because it clearly demonstrates where we're at right now. All right. I jump around all different time frames. I kind of know which time frame I'm trying to show because I've jumped around them. I've seen them. I watch this stuff every day. So if you're not that experienced, don't get confused about why I jump around time frames. All right. I run up and down these sets of time frames all day long looking for stuff. I spend a lot more time down here at the lower end than I do up here at the upper end. A lot of stuff I just look at the daily though. Just look at that daily chart. So we've got this going on right here. And when I say I spend a lot more time, I watch the ES, the NQ, oil, gold, the Russell. Yeah, 5 charts. I watch 5 charts all day long, every day. And usually I'm on like a 5-minute chart, 15-minute chart, 30-minute chart. Those 3 are kind of the main key ones I watch when I watch those 5 things. Now, that's to try to figure out where the twists and turns are in the market. So the S&P, key resistance going higher right here. If we get above that, we've got this consolidation right there at the 618 right now. That's the next level. Now, looking at this right now, I would venture to guess that this is probably going to go down a little further. Probably. And pull this down right about like that. At the minimum. It just looks like it wants to pull that fib line right there. Now, it's possible that we go on down to the daily roadmap line. We've kind of set this up. We might do it. But we might not. Like we made a big spike down yesterday. Now we're kind of reversing a little higher. Be careful. But this could be where we're heading. Before we finish this correction. Could be heading down right down here. Right around that $5,700 point area for S&P. We started this correction back here at this high. Drifting down, and we may come down here. Usually I'm looking at ES for clarity on direction. And this is why right now That retrace today is kind of an important level. We've pulled this down to here now, this resistance. If we get up through the roadmap line here, like we were yesterday, couldn't hold it, and then rapidly made a lower low. So now this is set up a resistance right there, just below that 618 resistance. So why did I switch to ES? ES is the S&P 500 futures. You can see they're kind of aligned right now. This right now has a higher low in place that can be bullish if we start breaking upside resistance. There's the 3 key levels right here. Right here where these double tops are. Right here where the 618 is. And then right here where this prior high was. And then right up here where this high was. Fourth one. Those are the upside resistances to going higher. Downside supports. This prior low. If we get below that, we're probably coming down right in here at the minimum to 830. This could be a final flush out. Doesn't have to go all the way down to the daily roadmap line, but sure does. Sure not far away. Sure not far away. Zoom her up. Right there, right at 5,700. This keeps creeping up, creeping up. So this could creep up a few more days. And this could come down. And we can meet right over here next week, possibly. So downside is possible. You see those extension targets right there, not far away. And it could be that we drift over here and this all comes together somewhere over here. And remember the inauguration on the 20th, right there. That's the day after, marked on here. The 9th, we do have a market close day for observing past President Carter. So even though next week wasn't supposed to be a holiday week, we're getting another holiday week thrown in the mix. Beautiful. Love it. Can't get back to normal. So NQ, this one also, this is NASDAQ futures. This one looking, golly, it's not far now to get down that extension right there. We kind of finding first move down, retrace, second move down, found supports. We could get extension right down in there very easily. Be careful with that. Russell here can't get off the roadmap line, just hanging. Look how many days. Like we came down here all the way over here. Been here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 10 trading days. Can't get off of it. That's not a sign of strength. If we're going to take a trip down to the daily roadmap line on ES or NQ, this one may take a trip right down here. Now, could go even deeper. It's possible it flushes even more. Could take a bigger flush down to 2050. Well, just like it did this big flush right here, we could do another one of those big flushes right down there. At the bottom end of the range. I was thinking we might rally on ES, NQ, Russell. But now I'm not so sure. If we just start, we could just flush it out right now. Just flush this out. Everything's looking kind of weak. Oil keeps pushing higher, trying to push through. Hasn't made a higher high yet today. Notice yesterday it closed right at the top of the roadmap line. Can't make this stuff up. Today, retesting those highs. If we can get bullish, we do have this big resistance zone. We popped up and rejected promptly, and came back, retested, and promptly ran away. Back here in October. So this will be a key area. If we start pushing on up, we may pop into that area, retrace to the roadmap line on the daily, and then set up a bullish POW type move right there. That's possible. Something to keep an eye on right there. If you're long oil, I have some 2026 UCO I held on to that's just kind of hanging. Just kind of hanging. Not aggressively trading oil at all. Just kind of waiting. Gold has the opportunity to bust through this area right here and go higher. Right up in here. But it could also turn down and head right down to the support. So a little bit of a coin flip on gold. Not very clear. This is only 3 moves up so far. We need an extension, a retrace, and extension to really clear this move up on gold. Bitcoin. Let's dive down. Let's go to all-time history. Come on down. Let's look at where we... So yesterday we had kind of a 5 up off the lows I kind of talked about. Well, there's a nice extension higher. We had this 5 up, this retrace, this next high up, next retrace. So we've got kind of a 1, 2, 1, 2. So this is possible that this was the 1, 2. And if this is a 3 of that move, we want to see it come on up here to this 100,000. But that's where things get a little sketchy. Things get a little sketchy. Because when we look at the whole big correction from the high we made back here, December 24th, or 17th, excuse me, December 17th, to that low right there, that 618 level hanging out right there to 100, 101, 102,000. If we pop up there and reject, that can easily take us down to the daily roadmap line. So something to be careful of right there. Something to be careful of. Ethereum got a little sparky here. Just a little though. We haven't really gone anywhere. All right, the 618 level still sitting there from this high back here on the 6th of December to this low right here on the 20th of December. That 618 level still hanging out at 3,700. We could push it all the way up to 3,890-ish, 3,900 really, and still end up coming down like that. Just not convinced this is all bullish yet. We could still get that extension. That first move down, that retrace, the next move down can take it right down there. DXY, dollar. We have a little bit more, just similar to the way I was showing the Ether upside. We could rally on up to 111.27. If we get above that, though, probably going to go out to a new all-time high, which would be interesting. Because this correction right here doesn't look finished. And this move off the low, this low right here, this move up off the low did not start off in any kind of bullish price action. Kind of reminds me of the way Russell finished up its move so far. Look at it. Look at the way this did. See how this did this correction? Then it went, and then it made a little bit higher high right there. And then it started flushing. We may see a bigger flush on Russell down into this area. This is the cautionary price action right here that happened in 22, 23, even into 24. We got this cautionary, choppy crap right in here. Very similar to the way the dollar did right there. It's also very similar to Dr. Copper. Right here, this stuff right here, not bullish. This thing, I still think copper is coming down here. Just looks like it. Looking at global liquidity. Global liquidity right here. Just sit in the box. There you go. All right. I go pull everything moving up $2 or more, put it on the gainers list, down $2 or more, put it on the decliners list. The list is incredibly short today, so this will probably not take a long time, and we'll probably wrap this up pretty quickly. So, looking for opportunities, but this is a holiday week, so I would be very cautious on opportunities this week. Next week, I'm not even sure that we're getting anything much better with the midweek close day on Thursday. This needs to break above this downtrend of highs to indicate we're going on up here. 299, 310, possible downside, possibly down to 194. Cold is natural gas, NG, 1 exclamation points. Looks like to me that cold is going to go higher as natural gas comes down here to the roadmap line. We hit the target. I don't know how long I talked about $4 targets. We got it. Sometimes I get lucky on these things. I mean, I talked about that for what? Sheesh. Talked about it since back over here. So almost, that was almost 2 years ago. I started talking about $4. Probably come up there, find resistance, and then turn down. Did go lower first. So, not really trading it. I'm just kind of want to keep track of. Cold may pop. A good target would be somewhere up here in the roadmap line area. As natural gas drops back down to the roadmap line, this one pop back up into the roadmap line. Then we'll see what happens. So this one's interesting. Most of the natural gas tickers are declining assets. This one, not as much. This one kind of hangs out, bobbing along here. We do get some regular splits, and we get some reverse splits. So they just keep adjusting it. It's like there's a regular split, there's a reverse split, there's a regular split. So as gas makes its big moves, and you get a reverse split, and then followed right by another reverse split. As gas exploded higher, they had to reverse split a couple times, then they had to do a regular split right there. Adjust it back. So they keep adjusting the numbers. This kind of reminds me of the way, if you look at UNG, they just keep reverse splitting, reverse splitting, reverse splitting. This one just keeps declining over time. Why? Because the price of natural gas doesn't go anywhere over time. Like, you look at this. We'll zoom out. Big picture. Come on. Big picture. Years, decades long. Price of gas doesn't go anywhere. We're still basically the same vicinity we were in 1996. Right? So expecting natural gas, this is one of those things you'd have to take short-term opportunities. Long-term, natural gas didn't go anywhere. As we find more of it, it goes down. As we start, increasing the usage of it, it comes up. Find more of it, it goes down. It's like a self-balancing, self-fulfilling prophecy there. And the average price, roughly right around $3.50 for the last 40 years. So that creates this, people are like, well, where's, you go for UNG, why would you want to touch that, right? Looks like a dumpster fire. Same thing on Boyle, why would you want to touch that? And you go look at cold, a little bit different picture, but it had the way they managed the leverage short on this, it got whacked right there when natural gas took a little spike. So this one kind of hangs out sideways, not really trending. What this kind of reminds me of, though, when you go look at VIX, right? You're like, wait, VIX? VIX is the volatility index. It just kind of hangs 20, roughly the long-term average price of VIX. Lately, we've been hanging out down here. And back here in 2018, selling VIX, short VIX was the big trade until it blew out. We went lower and lower and lower into a bottom. Then we blew it out. So long VIX, things that are counting on VIX going higher tend to be declining assets like VXX, UVXY, TVIX, VIXY. All these things tend to be declining assets. But you go look at the short, SVXY, it's kind of like when we looked at cold, you have a period of rapid climbing, then we get one of those big spikes in VIX from something that happened in 2020, and it plumbs out, and then we go on this climb again. So just kind of chopping sideways. So when I talk about declining assets, it's some of those charts like VXX. A lot of times when you have a underlying that tends to just stay sideways with some volatility, things that are long or leveraged long are going to be declining assets. Like this is the derivatives. Whereas, that works on gas, it works on VIX, other things that just kind of hang out sideways. So we'll go look at leverage on oil. Look where that one's kind of going long term. Why? Look at oil long term. Doesn't actually go anywhere. It's got that big dip down to zero, negative, but hasn't really been trending anywhere. It's like that's a wide range, but it's just kind of hanging. Average price of oil for the last 30 years, 40 years, somewhere around $40. It's gone up pretty crazy, and it's gone down pretty low, but somewhere around that $40 area. So other things that do trend though, look, gold's trending. So gold's trending higher over time. Bitcoin trending higher over time. Ethereum, not as much, not yet. Dollar doesn't like this is actually looks like it's trending lower over time. Lower high, lower high. So be careful chasing stuff. Try not to get stuck in the short term here. Now, short term opportunity, long term opportunity, this is probably going towards zero again, even with its ultra short. Probably at some event that spikes natural gas and pushes this thing into the dirt. VST, Vistra Corp. This has been up at targets. We could get the extension on up just a little higher. 189. Be very careful. One of these times it's going to be the last one, and we're going to go on a bigger retrace back down. SQ, square, block, whatever you want to call it. That did hit the resistance, the target, 99. This looks like to me it's on a path back down here. Come back down in here, find support. It's possible to get some exposure to it going back up again. Just speculating that high. If we hit the low somewhere right in here, that next area up could be 103, 106, possibly even that 116, which lines up with the prior pullback over here for the extension. So we could see this retrace here and then pop up in that area like that. CRNC. Yeah, I wouldn't mess with this. It's a big downtrend. Lower highs so far. No indication that this is the lowest low. Unless they just figured out how to do something crazy with their software. This looks like it may end up going lower again. Carvana. Hindenburg wrote a big report how the numbers are all made up. They're shifting the left pocket to the right pocket and calling it all profit. No real fundamental changes have been made to their business since they were back here in the single digits. Back here. A lot of people got really upset about it. This Hindenburg report that came out saying it's all full of crap. This can easily come right back down here if it turns out. I mean, I have yet to see a Hindenburg report that didn't have some elements of truth in it. Watch out right here. This can blow out. ADBE. I don't think Carvana is all of a sudden, like I've talked about Carvana being a dumpster fire of a company for a long time. Still think it is. I just don't see how their business model can work, but it's okay. Adobe probably coming down into this area. I probably wouldn't be a buyer until we get down to at least 396 and maybe even 350. Possibly even down to 300. And there's Boyle showing up on the list right there. Absolute dumpster fire. Be careful. That was probably the resistance, and we're probably going lower. They'll probably do a reverse split out here somewhere. Yet again. TEO. Well, that one just can't get through the roadmap line. Probably coming on down lower. Next support down, what, 114 area down there. X, US Steel. The deal with Nippon fell through because of the government, and probably coming down here. 65%. Yeah. Went from $8 to $13. Yeah. I'm not really interested though. That's a horrible, dangerous pattern. Like, did a rally over here and then can do a rally over here and go. I just stay the heck away. It's not the kind of stuff I like to chase after. Then Yang on the list and 3x bears on China. China's like having a hard time starting this year. Gonna need a lot more fiscal stimulus to try to get their economy off the basement floor. And you know what that causes? Inflation. You know what that's gonna do? Cause gold, Bitcoin, all those sort of assets like that to rise. All the anti-inflation stuff will rise over time. May not be a 2025 trade necessarily, but maybe it could be. As we see central banks pumping liquidity and money, quantitative easing, trying to get their economy off the floor, probably see inflation rear back up. And that's what I've talked about in DGS2. Yeah. Let's click on the chart that has it. This one over here, watch out. It's that DGS2 crosses that Fed funds rate. Problems are cooking. They see inflation rise. Fed chases rates higher. Take the orange line, rally it up. Cause the market to freak out. Writing's kind of on the wall. Then we have some kind of crash and we have to do QE and we do the cycle all over again. This has happened once, twice, 3 times since I've been trading, and we're setting up a 4th. They're never exactly the same. So, like I said, at 2 p.m., I'll be live with a third party going through some of my predictions like this later on the year. And come hang out. Register at the link. Let's see if I can throw it back in the chat. There we are, right there. You might want to use a disposable email address if you want to register with that. Come hang out. And see you at 2 p.m. Also, I'm offering Triple Threat Trader at 11 if you missed it yesterday. Link will be on Discord and Telegram. And I'll see you on Monday. I just don't got much to talk about here this week. Hopefully we'll try to get some semblance of back to normal next week. I'll probably do a crypto special on the 9th since the regular market's going to be closed. And have a great day.